Welcome to Drill Down Earnings. We have second quarter results from Datadog, that interesting observability company. It's doing pretty well, but I want to dig into the business story behind this stock on a move. Stock's not moving a ton in after the results were announced in the wee hours on Thursday morning, but I'm Futurum Group's Chief Market Strategist, Cory Johnson, and this is my job, to look at these companies and figure out something more than a beat or a miss, and it was a beat, and it was a guide and raise. They beat the numbers they said, they raised their guidance numbers. It wasn't fantastic though, so I want to dig into this. So in the quarter, they grew their customers 27%. That's great. They grew their large customers, the customers who pay them over $100,000 a year, by 13%. But that's good. That's a whole bunch of new products. But again, overall 27% revenue growth, pretty good. But when you dig a little bit deeper, think about what's going on here with observability. So observability, of course, is when you see how well all of the systems in an IT operation are working, from sort of stem to stern, checking things that are in containers and how those might affect what's being developed around them, checking out all of the processes and how the data works through an organization, and indeed seeing what's happening with AI and large language models and how those might be screwing up an organization's data systems. So, and then of course there's security, that heightened landscape that's of security threats across all kinds of industries has caused them to want to protect their digital assets. As the data moves to the cloud, even more risk is introduced, and that gives opportunity for companies like Datadog. So with these guys with over 3,000 large customers, as I mentioned, paying over $100,000 a year, they've seen decent growth there, and security driving a lot of that growth. So that they've got 27% revenue growth, as I mentioned. They're also starting to make money finally, only 2% operating margins, but that's better than the losses they put up quarter after quarter in the last few years. When the numbers came out, stock rallied a little bit, up about 5%, and that gives it about a 29% return for the year. So doing better than the S&P 500, not as well as some tech companies. But the excitement here and the opportunity might indeed be AI and how large language models and modeling that enormous amount of data throughout an entire system at a company may provide opportunities for observability companies, particularly for Datadog. Here's the CEO Olivier Pomel talking about exactly that.
Typically, is customers build applications using developer tools, and there's a whole industry that has emerged around developer tools and playgrounds and things like that for LLMs. And so they use not one, but 100 different things to do that, which is fairly similar to what you might find on the IDE side or code editor side, for the more traditional development. Lots of different, very fragmented environments on that side. When they start connecting the LLM to the rest of the application, then they start to need visibility that includes the other components, because the LLM doesn't work in a vacuum. It's plugged into a front end. It works with authentication and security. It works with connects to other systems, databases, and other services to get the data. And at that point, they need it to be integrated with the rest of the observability. For the customers that use the LLM observability product, they use us for all the rest of their stack. And it would make absolutely no sense for them to operate their LLMs in isolation pretty separately and not have the visibility across the whole application. So it's at that point, it's a no-brainer that they need everything to be integrated in production.
So a no-brainer to use Datadog services? Perhaps, but I want to talk about the company's guidance, the one number that tells us a whole lot about Datadog right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Datadog, second quarter earnings, here's what you need to know. It's your essential summary, your drill down earnings takeaway. So revenue growth of 27%, that's good, to $645 million. They were profitable, or at least in terms of operating profits, with 2% operating profit being better than the losses they put up last year. But I thought there was a note of concern to me, and yes, Wall Street liked it, the stock was bid up, but their guidance said, while it was better than the guidance had been, said that the revenue growth would go down to 21% on a year-over-year basis. That's worse than the 27% they've been putting up. So we'll keep an eye on that number. It gives them an opportunity to beat it, but 21% revenue growth is their prediction for next quarter, worse than the current quarter. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check me out at X at Cory TV, and Instagram and TikTok at Drill Down Pod. See all of our earnings reports right here on YouTube at the 6.5 Media page, because Drill Down Earnings is indeed part of 6.5 Media.